Ladies and gentlemen, the stock market is reacting strongly and positively to the interest rate cut that is potentially coming towards the end of the year. And let me analyze for you what are the upsides and possible risk of the interest rate outlook and the implication towards the stock market, bonds market, REITs, and the economy. Let's watch on, shall we? So this is a deck that is made with the power of AI, and I thought it's a wonderful new look, and I want to show you guys, and I'll be sharing with you more and more of how AI can change our lives. So our agenda for today covers the following. I will cover the outlook for the Federal Reserve possible rate cuts all the way to September and October, November, December, the macroeconomic implication, the stock market implication, and the financial market implication, and the possible risk that could happen towards the end of the year. I think it's important for me, number one, to put a caveat that this video is for education and entertainment, not financial advice. But more importantly, yesterday, Tom Lee gave also a projection that in the month of August, it could hit as high as 6,500 or 6,600 points. In time to come, within 12 months, it could hit 7,000 points for S&P 500. All these are very good and positive news. But I think the root of this projection is really down to the interest rate cut that is possibly coming. But let's watch on, shall we? So right now, the CME Fed Watch is projecting a very high interest rate cut possibility in the month of September. So it's looking really very high and close to 90% chance that you have a rate cut. And towards October, another one, 60%, and then towards December, 49%. So all in all, there could possibly be at least one, likely two, maybe even three 25% rate cut. And that would be very, very positive towards the financial market because interest rate is always seen as a cost for the stock market. Now, why all these things are happening is largely because right now there are macroeconomic tailwinds that would pressurize the Federal Reserve, who is pursuing a dual mandate. One is for maximum employment, and number two is for price stability. More or less, they have been achieving price stability. They are always very afraid of inflation. I think that part has been coming down. And right now, they are really showing that jobs creation is slowing down significantly. In fact, the job numbers has been also adjusted in previous months and things like that. Donald Trump is so angry that he actually fired the Bureau of Labor Statistics chief so that he will get better numbers moving forward. Okay, and of course, with all this, the market is projecting at least one rate cut, likely two, and maybe even three rate cut by end of December. So the financial implication is very simple. The equities will likely to have a very bullish outlook if there's an interest rate cut. So that's largely because in typical financial modeling or financial outlook, the company makes a stream of income, and if the interest rate were to fall, the value of the stream of income will be valued higher. Okay, we call this discounting, and this would affect growth and tech stock even more, like significantly even more, which means that those Max 7 and AI companies will be valued even much more. And I think that the current projection of stock market going up will go even higher if there is a interest rate cut. And for the bonds, which we have been waiting for a long, long time, finally the day is here. If the interest rate were to cut, then the bond prices will rise. Okay, and this is a mathematical outlook. And the longer duration asset will tend to outperform things like TLT, PIMCO, and all this will have possibly a outlook that is very positive. And for those people who have been hit so hard over the last 2 years or 3 years over the REITs, now you could see a possible positive outlook because when interest rate falls, the cost of borrowing reduces, and a lot of the REITs generally tend to do very well, okay, when there's low interest environment. So the financial outlook generally look positive, and I'll tell you some of the things that don't look so positive if things were to happen. So let me further emphasize that the US equity market outlook is going to look very positive, in particular to the technology and AI focused company. And I'll imagine that the NASDAQ 100 index, the S&P 500 index, even counters such as the MAC 7, all these were poised for new highs, and it's already on the track of happening. Even the Singapore equities market, which is now growing from strength to strength, has caught up what is lost over the last 18 years. I think the banks will continue to do okay. I think the fall in interest rate may have a small impact on them in the downside, but I think they have got a lot of upside non-interest rate income. The REITs will continue to do well, especially in Singapore, which has been trailing for a long time, underperformance. Of course, when the interest rate were to fall, there is potentially softening for the Singapore dollar and potential improvement in global demand, and therefore that stimulation to the global economy could help Singapore as well. Now, I want to emphasize a bit on the fixed income strategy. For those people who has been pursuing income strategy, in particular with REITs, bonds, US Treasuries, for like myself, I touch the TLT and PIMCO fund and all this. I think all this will tend to do well, and I think the outlook will stand to do possibly an upside. My guess, could be 5, 10, 20% at least, maybe even 30%. But let's see. I'm not very sure, but this is just a wild guess from me. Now, this outlook is not without risk. There are risks as well, because in the event that Trump's tariff war turn out to a state where there is persistent inflation, and if the inflation persistently exceeds 3%, for example, then the Federal Reserve may, after cutting one rate cut and stop, right? Then that will be pretty disappointing. Or they may even not cut, right? But I think that the likelihood is low on this one, because generally, tariff wars tend to lead softening of economy. The other fear that we have is that U.S. economy continue to do super well, red hot well, and that would reduce the urgency for monetary policy easing, and in particular about labor market. If the labor market remains tight, which is softening right now, then there will be a reduced reason why the Federal Reserve want to cut interest rate. Now, there could be geopolitical tension. I think it's very unlikely, but I think the bigger one would be between China and US on the tariff negotiation. If they just keep postponing the outcome, I think that is good. Okay, but I've decided to come to an agreement that is very hostile, then that is going to be really bad, really very bad. That could turn inflationary and things like that. Last is, I think this whole thing will have a very positive outcome. I forgot to say that if the interest rate were to fall, then the US government potentially will save money on its debt obligation, and that will further help the fiscal position of the US government. On top of that, there's a huge amount of tariff revenue that's coming in. So I think that the outlook looks good, but in case that Donald Trump go on the spending spree after realizing that he made a lot of money from all the other country, that he outdone what he has gained, then that's a different story. But I think these are the risks that outlook has. I think the outlook looks very positive. I'm not going to add new positions, but I'll just ride the positions and let it grow from strength to strength. I've got enough position on the stocks and the bonds, which both will tend to do well in a interest rate cut. And I think that I'm just going to ride this way. What I'll do is that whenever there are new developments, I will keep you guys informed. So remember, hit subscribe and don't miss one move. Supposing there are sudden change, or I may even go into positions of rebalancing through minor profit taking, I'll inform everybody. So just remember, hit subscribe and don't miss a single live stream, which some of them I cannot keep. Okay, so thank you, and I'll see you tonight. Bye-bye. Hello everybody. Today we have a very special gift that I bought myself, which is a walking pad. Okay, basically it's a treadmill, and it's a portable one, so it doesn't take up a lot of space. Someone recommended me this, slightly above $200, and I thought it's a good buy, and there's a lot of people give very positive review. I'm gonna open it and try it. I don't make a single cent. I don't know who this company is, but I'm just gonna try it and see. Okay, so I'm not recommending this to you. Okay, so let's open up and see. Okay. All right. So what we have is here. Okay. All right. Okay. Pause for. Okay. So we just open up. Okay. So this is the power. Okay. There's a Singapore plug. Okay. Oh man. I think I need scissors. So I'm going now. Right. And I'm sure this is a mid and wow. Yeah, it's small. Okay. Alright. Okay. Something else. Okay. Good. Go. Let's see how it is. Okay. And this. This now this. Okay. Wow. Small. Installation menu. Okay. Installation menu. Okay. So I've been using this for my walking so far for the last 10-15 minutes, and I must say that it's going to be a life changer for me, okay, to have a treadmill at home. Now I can exercise at home, and when I feel free, I just come. So right now I've got 14,100 steps right now. Not on this machine but whole day, but this just supplement. Actually, I didn't even tend to walk just now, but this would be filler, right? You fill up 2,000 steps, 2,000 steps, 2,000 steps, and just gain, right? Yeah. See, and this environment, my daughter gave a good idea. You click this kind of fan here, maybe another one to put your phones and things like that. I think this is great. With $200, what the hell?